Hello, everybody. It doesn't get much more bullish than the reversal that we saw today of yesterday's reversal. On Monday, it appeared that stocks found clear resistance at their 50-day moving averages and that the next step was to continue with the range-bound trading and or go try to test the February lows. Following today's session, all of our market models have switched to a neutral operational condition across the board. Very strong retake of the 50-day moving average on higher volume on the NASDAQ. The only problem is the volume is still below average. And as long as we have below average volume rallies and the technical situation continues to look like it is, which I got to admit, guys, it's still garbage out there. It looks like trash. The V-shaped rallies, the wrong volume characteristics, it all still exists. Until we get some kind of pullback or backing and filling and then a resumption of the uptrend, it is foolish to go all in or go heavily long without extremely tight stops and or an ability to monitor the market at all times on an intraday basis. This remains an intraday market only for large positions, for overnight positions. You've got to continue to trade scared because this is an extremely volatile V-shaped, unbelievable tape with the way that we move. We just cratered on huge volume in 2016. Now we're bouncing on no volume. Yet it appears that this could continue to go on. And if we would actually go hit new highs on lower volume, wow, that would be the most shocking thing, but it would not surprise me whatsoever. I would almost expect that from this market. The problem is, as long as we have no volume, you can be sure we'll roll right back over, and then we'll come back into the trading range and possibly hit new lows. Very unhealthy action overall. And while Investors Business Daily, some indexes track, I don't know what Warden does and what MarketSmith does. I can look more into it, but I need to see everything confirmed, and then it's like, okay, this is a clear day. But right now, for what it is, the NYSE and S&P 500 volume is higher than the day before on Investors Business Daily. But in Telechart, you can see it's lower than the day before. So I'm not sure where they're getting it from, the exchanges or the actual index components. But either way, it's not a total confirmation across the board. So the S&P 500 volume is lower than the day before. Not great action, but you know what? The retake of the 50-day moving average and the recent highs, all is well. Neutral conditions across the board in every index. And in what should be the biggest standout, the Russell 2000 lagged today. It was the weakest index, only up 1.99%. In really strong uptrends, the Russell 2000 and the NASDAQ both lead higher. So we have some small issues still. The Dow Jones Transportation Average continues to look good. It's switching to a neutral from a sell signal for the first time since May. So this is the first time the DJT has gone to a neutral in almost a full year. I tell you what, that's a very long time for a signal to stay true. And even then, it was a choppy move lower. Low return markets, range-bound markets, what are you going to do? The 10-year is what? Yielding under 2%? That tells you that, you should expect a little bit better than a 2% return over each year for the next 10 years compared to the stock market. If you get 3% per year for the next 10 years, you're doing great, is what it basically is telling me whenever the 10-year yield is at 1.8 something percent. But overall, pretty decent day. Now, that being said, there are some house cleaning notes. IDA is a 50% sell with it closing below the 50-day moving average, so a move below 69.85. You should be out of half of it. My final sell stop remains right here, these lows. I already got out of half my position with the move below this low a day here on this session, as that was too big of a reversal so soon after a breakout for me to even want to stick around, considering the way that OGS traded yesterday. And unfortunately, OLLI did exactly I thought it would do today, and it has re-reversed my shakeout from yesterday. So while OLLI is still good on an end-of-day basis, I got clipped out of it. So what are you going to do? All you can do is buy it back. My buyback right now, my buy stops are with the move above 21.27. I'll take back on half of OLLI, not the original full position, because it's just now it's too volatile. They shouldn't have shaken me out yesterday. And that's what you're going to do in this market. In this market, you're going to get shaken out. Don't forget OCLR. We got shaken out in January. Look at it since our long signal now up 64%. There is nothing you can do. VLRS, once again, I got shaken out of this thing. Since the long signal, this was the really good long signal back here, it's up 18%. There's nothing you can do. STMP, got the long signal for this one back here on 225, had earnings that evening, gapped up. But now STMP is breaking out to a new high, 2 days in a row of max green bop, heavier volume again today, well above average. It is a new long signal, but I only want it if I can get my limit order filled at 120.87. I do not want to pay 122.25, 122.35, or whatever for this stock because my first cut loss is at 116 and my next one is 113.08. I don't want to open myself up to too much more risk beyond what the pivot point of this breakout already is because I should be long from 96.29. Not 122.25. But that's what this market is. You either deal with the market that you have or you don't deal with it and you don't trade. Me, I got to keep myself in the game. But it was in a ton of scans. CanSlim, it's a perfect speculator quality name. It was in my new 52-week high scan and the price volume bop scan. In a raging bull market where this base might be longer, let's say, in the 50-day moving average is closer to the price, this is how that would go. CanSlim 5%, Perfect Speculator 5%. Now we got a 10% position. New highs another 1%. Now we got an 11% position. Price volume bop anywhere from 1 to 2%. Now we've got a 12% to 13% position in STMP. The only way STMP could be bigger is if it breaks out from an extremely long base, which it's not doing. But for now, even though we're under fall through day and we finally had what I consider a real fall through day that's thrown our market models back into neutral, still 2%. Nothing more, nothing less. Not when it's this extended from its 20, 10, and 5-day moving average. Not a big fan of chasing stocks that far ahead of their 5-day moving average, but if this market's going to take a V-ramp to new highs, I don't see why STMP can't just continue to climb higher, similar to Ruby post-earnings. You see how it's going. Problem is the pullbacks and whatever. I got to stay in the game. Also, ALRM, another stock we were long. If you remember, we got a long signal back in ALRM back here. I can't remember if it was here or here, but this looks more right. It failed immediately, but since that long signal, if we could handle the volatility and or if the market could trade normal for once, thanks to HFT and algos, I don't think that's going to be the case for a while. We would still be long ALRM. As it is, it was an earnings winner 2 sessions ago, held up relatively well on Monday, and today, surge and bop, strong volume well above the 50-day volume average, and it's finishing near the upper half of its intraday range. So I don't want to pay more than 20.58. That's where my limit's going to be, 20.58. First sell stop's below 19.76. Next one is below 19.16. Yesterday's low a day. But ALRM, CanSlim, 1%. It's also an IPO, which I give more capital to because IPOs are newer. They have a potential to be more explosive than stocks that have been around for a while. So that's 1.5%. And then it was also in price volume, my price volume bop scan, so a total of 2%. And it can't get any higher than that. This can't be 5% CanSlim, 1 and 1 for IPO price volume bop. Scan isn't long enough. And once again, my ultimate thing that I care about is the stock price touching the 20, 10 day moving average? No, it's not even touching the 5. So it's very risky here overall. These are really plays on them being earnings winner and them being underpriced to where they should be truly priced. So either they keep going up immediately or we cut our losses and redo the whole drawing board again. That's what this market is doing to us. There's nothing you can do. Like I said, you trade the market that it's given, you position size accordingly, or you don't trade at all. Now, on that also note, this market is really messing with my head in 2016. It hasn't cost me money this year. I'm basically flat for the year. I'll take that considering the nightmare end-of-day trend following has been. But DRV, RWR, major failures. Added too much. My system told me only 2.5%, Josh, but I went 5% because it was a perfect signal. And when they do this to perfect signals, you know you need to keep it small. So RWR failed, and also UVXW closed below the January lows, officially ending our long signal from back in late November, I guess it was. Nope, beginning of December. So UVXY, we took our final profits on that one, and it was minor considering that it was up a total of 100%. It leaves us with a 24% gain. It is what it is.